Hello and welcome to SIBO Volatility 411. My name is Dan Deming and I'm a KKM Financial. Well, VIX Cash basically unchanged on the day, 1695. We did see a low print pre-market 1620, but for the most part hovering right around this 1695-17 level, which is the low end of the range for the past year plus, post-pandemic low basically. Looking at realized volatility, 30-day realized volatility week over week, right around 17. So you look at the VIX Cash hovering around 17, implied level, 30-day realized volatility right around 17. Those are pretty much right in line with each other this week. And the roll market today is out about 15 cents. Interesting dynamic. We're seeing the futures curve shifting higher today. Really, after two continuous weeks of selling pressure, we're seeing the futures bump up a little bit today, even though the VIX Cash is flat. Looking at the at-the-money straddle on the SPX, 13.8%. Again, low end of the range as we continue to see vol compressing here. Skew factor right around 139. That's in the middle of the recent range of the last several months for that fact. And also looking at VVIX, measure implied volatility in the VIX options, 101. Now that's coming off a low print of 95 yesterday though, and that's the lowest print for the VVIX going back to September of last year. So we're seeing a little bit of firmness in those options, and I think the reason why we are today is we're seeing a lot of out of the money ratio spreads trading today in April, May, and June. So we are seeing some demand for the high side calls and some hedging potentially going on here as we see a lot of activity in the call side today, more so than the put side in the VIX options. Next week, I want to point out we got several things that could influence the vol structure. CPI, now that PPI came in hot. We also have some data points on Thursday highlighted by retail sales. Earnings next week with the banks kicking it off, and then SPX expiration next week, VIX expiration a week from next Wednesday.